On the economic front, Zimbabwe's annual inflation was 75.2% in April, from 87.6% in March. But on a monthly basis, inflation rose 2.3%. That's percentage points to 2.4% in the month. And the country's statistics agency reported today. Now, what do the latest figures mean for local consumers? Iben Mabunda answers this and other questions in the following report.
Now, the country's statistics agency now publishes inflation stats in what is known as blended inflation. This is a fusion of the prices in US dollars as well as the prices in the Zimbabwe dollar. According to the agency, this is an attempt to give a true picture of the price movements here in Zimbabwe. But the prices on the shelves and the mood on the streets of Harare tell a completely different story. In March, a 10-kilogram bag of maize meal, which would cost you 8,599 Zimbabwean dollars, but now the price has gone up to 11,000 Zimbabwe dollars. A 2-liter bottle of cooking oil, which cost 4,389, now costs 9,600 Zimbabwe dollars. A 2-kilogram bag of rice, which was worth 2,630 Zimbabwe dollars, is now fetching 3,799 Zimbabwe dollars, and a 2-kilogram packet of sugar, which cost 3,199 Zimbabwean dollars in March, is now worth 3,889 Zimbabwean dollars. Consumers, most of whom are paid in the local currency, can barely keep up. I spoke to Ray Makora, a 31-year-old civil structural engineer.
The prices, they're going up every day. It's a headache in the sense that when I get into the shop, I have to shop around in OK. I have to shop around in any other shop to see if to see which shop does have the prices that are favorable.
But the retailers lay the blame elsewhere. They say in the absence of reliable electricity, the cost of running backup generators and migrating to solar has made their operations much more costly.
Most businesses are actually crying right now that for commercial use, you've got to pay for electricity in US dollars. You also have got local authorities. Recently, especially if you check most local authorities, they raised the shop license fees from a mere 200 US dollars equivalent to currently to 1,100 US dollars. That's huge. That's a huge jump that most businesses are not going to be able to meet such an obligation.
What has made the situation worse is how some shops are now charging other products exclusively in US dollars.
The Consumer Protection Commission is definitely going to investigate such shops. Retailers cannot be refusing the Zimbabwe dollar because it's legal tender.
The Zimbabwe dollar continues to depreciate against other currencies, with the spending power of the consumers waning by the day. Iben Mabunda from Harare for ZTN Prime.
Thanks, Eben, for that update. And we're joined, of course, live by Business Weekly Deputy Editor Kudzi Sharara to help us put the latest inflation figures into perspective. Kudzi, good evening. Is the blended model reflective of what is prevailing on the market right now? And how do you feel inflation will play out going forward?
So yes, ZimStat released its inflation figures for the month of April today, and from what we see, the inflation is actually creeping up, the month-on-month inflation that is, from about 1% to 2.4%, whilst the year-on-year inflation is actually coming down from more than 80% to 75%. This is the blended inflation which was recently adopted by authorities. However, there are two key users of inflation figures in the country, and we are talking about policymakers from a government point of view. We are also talking about the business community. And whilst government side, they are happy with the blended inflation, the business community has since dismissed the usability of blended inflation, which they believe there's still a large chunk of the economy that is still using exclusively in local Zimbabwe dollars. We know there are still some employees that are still being paid exclusively in local dollar terms, and those who actually require to see where inflation is in terms of the Zimbabwean dollar, and these numbers are no longer available. Probably what they can use as a measure of or a gauge of inflation is actually the poverty datum line, which shows that month on month the amount of money that is required by an individual for them not to be considered as a poor has gone up by 11% month on month. So that shows you that prices of basic commodities and everything that people require in their day-to-day living is actually going up. 11% is a double-digit figure, which shows that prices are actually tracking the exchange rate. And again, just this week we witnessed the exchange rate moving again, which means that going forward we are likely to see high levels of inflation. Already the blended inflation that is favored by the authorities is creeping up, and then you also look at the poverty datum line, which is more of your cost of living, is also creeping up. So there is pressure on inflation, and already we hear that the Minister of Finance and Economic Development Minister, Professor Mthuli Ncube, is already talking about probably hiking interest rates once again when you are speaking at the ZTN business conference, and you're saying he might consider hiking interest rates again if the exchange rate continues to move up, because inflation figures in Zimbabwe are determined or are linked to what happens to the exchange rate, and we have seen what has happened to the exchange rate this week.
Many thanks, Kudzi. Always great having you on News Plus. We will keep our tabs to see if those projections will come through.